the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey. Got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A lot of to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out, yeah. Cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through.
Fucking go!
You know all the shit
Make sure you guys go to Spotify and check out Paul P. The song is called Living Through. Fantastic. He's an ape just like the rest of us.
Now I'm living with my choices, I just own my mistakes. Cause I'm screaming fucking hand down, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking as I smoke it to the face. Now it's time for these apologies, the time is too late. So bygones be bygones, I'm on business with a tie on. So fuck a shoulder to cry on, I'ma get a hopper like Zion. Let's raise a glass, I'll toast that. Reminisce, we roast that. How I wrote them and ain't wrote back. I'm never flimsy, the goat's back. So I don't feel bad, no not at all. When a lot of years, write a lot of calls, a lot of birthdays without a call. Ain't got time for that, so fuck a fraud. You ain't there for me, I ain't there for you. You won't bleed for me, I won't bleed for you. All the hard times I lived through, keep moving, gotta get through. I got goals and cash, I gotta get to. All these memories that I flipped through. If you can't relate, then don't judge. I stand my ground, I won't budge. I'm sitting back cause I burn buds. I swear to God, this life's good. You don't know all this.
Alright, ladies and gentlemen, let's kick this thing off here. We got a hell of a banger coming up right now. Alright, here's what's going on. Take a quick look at AMC. This was pre-market. Pre-market on October 10th, AMC was down at $9.71, shot up to $10.08. This was exactly what I needed to see here in order to confirm what kind of price action we were going to be seeing today. And it confirmed everything that I wanted to know. So at that moment, I knew I was good to go to bed and take a nap before market opened up, because I knew that we were going to see some heavy volume. And that's exactly what we did. We saw today a volume of 27.3 million shares traded. Again, remember, this is post-split now. There's only 198 million shares of AMC. So pre-split, that would actually be more like 273 million shares traded in equivalent fashion. So that being said, as you can see, very interesting price action in pre-market. Stock shorted down pretty heavily as soon as the market opened to 962, and then within a matter of 2 hours, she was up at $10.37. 10.37, 10.38 was the high of the day on AMC. You can see what happened immediately after. Just straight red candles here as a significant amount of shorting occurred here. Check this out. And then, of course, the buying pressure kept returning, and then the selling pressure here in short selling. Today, we saw a higher short volume than many people expect. Over 16 million shares were sold short today, over 56% of the shares that were traded today were sold short. Let me switch up my screens here, and you guys can see exactly what I'm talking about. But before we do, we can talk about that a little further in depth. Take a look at the MACD and the Chaikin oscillator. This is the Chaikin oscillator here. This is the MACD at the bottom, the 1226.9. You can see when the MACD crosses over and the yellow line basically crosses over the blue, it usually coincides with positive price action. And when it goes below, it's either selling or naked shorting or short selling or selling of some sort here. But we'll take a look at the on-balance volume, and we'll realize that is not retail investors selling their shares at $10.37. So looking at the Chaikin oscillator, and the whole purpose of it is basically to identify the momentum that occurs during fluctuations in the accumulation and distribution. Specifically, it applies to the MACD indicator to accumulation and distribution rather than the closing prices. So, for example, when I want to determine whether a stock price is more likely to go up or fall, and the MACD is trending higher, as it was here in this moment, the Chaikin oscillator generates a divergence, a bullish divergence, when it crosses over the baseline. The baseline being this, what should I call it? This staggered, dotted gray line. The baseline is called the accumulation distribution line, and across above the ADL, the AD line, indicates that traders are accumulating, which is typically bullish and but indicates an increase in price. So it utilizes two primary buy and sell signals, basically. A positive divergence is confirmed when the center line here is a crossover above the ADL line, signaling a potential buying opportunity. And second, a negative divergence is when this line drops down below, as you can see here. As soon as we started seeing a few red candles here on the 2-minute chart, the line crossed below the ADL, and the yellow you can see continued downwards as this short selling and selling here occurred. So that being said, you can imagine that you're at an auction, for example, and on one side there's buyers, whether they be market makers or retail investors, and on the other side, those would be at the top of the Chaikin oscillator, and on the other side are sellers, and that would be at the bottom. It doesn't matter if it's retail sellers or short sellers or naked short sellers or shorts marked as long, it still counts as a sale. Again, short exempts also. So when there's more sellers than there are buyers, the price of the auction declines, and when there's buyers in the majority, the price increases. And you can zoom in on it on a shorter time frame, 2-minute and 1-minute intervals as well, to get a better indication of what's going on with it. So you can take a look at it even on the 1-minute chart to get even more detail, and you can see just how heavily that swing was as soon as it dumped in the second red candle. You can see that it started crossing downwards, hit a low of 962, came back up, kind of trended around the center, and then blew up above the MACD pretty heavily, and at that point hit 1010, again kind of barcoded and leveled off, and you can see here it kind of crossed underneath ever so slightly on the Chaikin oscillator, and then again started trending upwards, slightly below, and then trended a little higher all the way to the 1037 mark. Again, look at these heavy red candles, immediately started dropping it down based off these candles alone, as the price was shorted down to $9.82. And I know this because there was over 56.87% short volume today, meaning that over 16 million shares were sold short. And taking a look at the price, we still ended up with 27.39 million shares traded, still ended up in the green, up about an entire percentage point. So I'm pretty happy about that. And even looking down here, look at it, you see it's right before the end of the day, to get the stock to close under $10, there was some very heavy red candles shorting occurring here by the algorithms. to make the stock close at $9.92. And even further, if you zoom in, you can see on the Chaikin oscillator that the price was pushed a little further down and still ended up after hours closing at the end of the after hours chart around $9.89. Overall, a pretty great day for AMC stock, considering that on the 1 month time frame, when in doubt, zoom out. On the 1 month time frame, AMC is up about 32%, just focusing on the 1 month alone that we've seen here, from 705 to 996. As a pretty healthy movement. And I hear a lot of people complaining that stating that adjusting for the reverse split, that it's really only at 99 cents and blah, blah, blah. The fact of the matter is that there are now 10 times fewer shares, and the real price now is $9.92, regardless of whether or not your dollar cost average is higher or lower, simply because the share price no longer needs to be adjusted for the reverse split. The only thing that needs to be adjusted for the reverse split is the share price you decide to sell at. This is the new share price. There are no longer 1.4 billion shares of AMC and APE combined. There are now only 198 million shares of AMC total. So that being said, now that I've got that out of the way, let's move on here. You can see the AMC short volume. When you combine the total short volume reported off exchange, on exchange, you have over 56.93% short volume today, and the stock was still green. And the total volume reported short was way higher than 16 million, which is what I saw about an hour after close. It has now been reported all the way up to 20,548,000 short shares sold today, on top of, out of the 27 million total shares that were traded. So 27 million were traded, 20.5 were sold short. The stock still ended up in the green. That is fantastic news for me. But as you can see, the short volume has been increasing over the last couple of weeks, and the price of the stock is still increasing now. This, in my opinion, is due to the settlement of shares of the 40 million shares that AMC had sold on the market. And I believe those shares, due to the T+35 rule, are now being delivered. Now, not sure if you're aware, but AMP Trading, the broker-dealer, has increased their margin requirements on many exchange maintenance margin, mainly on their CME futures, because that's what AMP does. AMP allows people to trade futures, and those are CME futures. They have recently increased them to 100% for exchange maintenance margin requirements, effective yesterday. I'll just leave this smaller and I'll read it to you since the text is pretty small. That says, due to the high risk of extreme market volatility, we have temporarily set the margins to 100% exchange maintenance margin requirement. We'll be monitoring market conditions and adjust margins once deemed appropriate. And they made those changes to the micro mini S&P 500, the NASDAQ 100, the Dow, the Russell 2000, the DAX in Germany, and the Euro Stoxx 50. They also made those changes to the indices for the E-mini S&P 500, the NASDAQ, etc., as I stated here below, for maintenance, the DAX, the mini DAX, etc. So they are well aware that there is a high chance of volatility in financial markets and indices due to all the macroeconomic and geopolitical and collateral issues that are currently occurring on the markets. Now, that being said, you know what? Before we get into Goldman Sachs, no, better yet, let's talk about JP Morgan. All right, JP Morgan Chase just got hit with another fine, a big one. 5-count felon JP Morgan Chase gets hit with another federal fine for 40 million illegal trades, basically derivative violations. And guess what? They paid 37.5 cents. This just occurred about a week ago. This is new. This is different from anything else I've told you about on the channel. This is yet another fine for JP Morgan Chase, Goldman Sachs, and Bank of America. All three of them combined were fined $53 million for these violations. And basically, over a period of 5 years, they failed to report or failed to correctly report more than 40 million swap transactions, according to the CFTC. The fine was a pathetic $15 million in total for 3 JP Morgan units, meaning that this cost them 37.5 cents per violation of the law. And last year, JP Morgan Chase reported $37.7 billion in net income. A fine of $15 million for the 40 million violations of the law is an absolute joke. And you know that the JP Morgan traders are going to be joking about this around the water cooler. So basically, if you're wondering, what's a swap? A swap is a derivative trade between two parties via a contract. They are traded over the counter by ISDA banks. According to the CFTC, the Commodities Futures Trading Commission, these 40 million derivatives in this $15 million fight against JP Morgan Chase involved interest rate derivatives, Forex derivatives, commodity derivatives, and take a guess, you got it, stock derivatives, like AMC stock. So swaps on interest rate derivatives such as treasury bonds and so on, and RRP, Forex derivatives, and commodity derivatives such as the U.S. dollar, the CAD, commodities as silver, gold, etc., oil, equity stock derivatives such as swaps on AMC, GameStop, and so on. So if you're wondering why would a trading house like JP Morgan and Goldman Sachs and Bank of America fail to report a derivative trade, the answer is that they exceeded their speculative trading limits, or that their counterparties on the trade were a risky counterparty that a federally insured bank should never be doing business with, or whom already had too many risky derivative trades. It could also be that a large trading house was attempting to manipulate the markets to benefit one of their other positions. So regarding that point, attempting to manipulate the market to benefit one of their trading positions is not the first time. It has happened very often. This has happened very often. It's not the first time is what I was trying to say. For example, on September 29th, the U.S. Department of Justice charged JP Morgan Chase with rigging the precious metals market and hit them with a criminal felony count for conduct, in which they admitted guilt. According to the Justice Department, the rigging occurred for more than 8 years, from 2008 through 2016, and involved tens of thousands of separate incidents. And the Justice Department wrote that traders at JP Morgan Chase knowingly and intentionally placed orders to buy and sell precious metals futures contracts with the intent to cancel those orders before execution. This is the same thing as we would call spoofing on stock trades. This included an attempt to profit by deceiving other market participants through false and fraudulent pretenses and representations concerning the existence of genuine supply and demand for precious metals futures contracts. By placing deceptive precious metals orders, the subject traders intended to inject false and misleading information about the genuine supply and demand for precious metals futures contracts into the market, and to deceive other participants in those markets to believing something untrue, namely that the visible order book accurately reflected market-based forces of supply and demand. This false and misleading info was intended to trick other market participants, including competing financial institutions and traders, into reacting to the apparent change and imbalance in supply and demand by buying and selling precious metals futures contracts at different quantities, prices, and times that they otherwise likely would not have traded. They do the same thing with their stock equity swaps. So in this current case now in 2023, the CFTC wrote that it was recognizing JP Morgan's substantial cooperation and appropriate remediation, which basically means that we're going to let them off the hook easy. So they gave them a reduced civil monetary penalty, and I quote that from the CFTC. And honestly, they appear absolutely fucking clueless. So this is the same bank that the chair of the Senate Permanent Subcommittee on Investigations in 2013 said, quote, piled on risk, hid losses, disregarded risk limits, manipulated risk models, dodged oversight, and misinformed the public, end quote. That statement was made regarding the London whale derivatives scandal at JP Morgan Chase, where they used your money, depositors' money, from their federally insured bank to gamble in the London derivatives market and ended up losing $6.2 billion. This is the same bank that recently agreed to pay $365 million to settle claims that they rolled out the red carpet for child sex trafficker Jeffrey Epstein for a decade and a half in order to boost their bottom line. JP Morgan Chase didn't report to law enforcement Jeffrey Epstein's hundreds of suspicious withdrawals of cash, sometimes $40,000 to $80,000 per month, until Epstein was dead in his jail cell in 2019 while awaiting a new trial. The $365 million in settlements for that were made with Epstein victims and with the Attorney General for the United States Virgin Islands. And the U.S. Department of Justice has yet to bring criminal charges against JP Morgan Chase for acting as a cash conduit for a notorious sex trafficker of children for over 15 fucking years. The federal regulators are defining deviancy on Wall Street and are greasing the skids for yet another epic market crash like the one that occurred in 2008 that left the United States economy in shambles. Ladies and gentlemen, they're up to their same old tricks, and they're here gambling with your money. Remember that. JP Morgan Chase is gambling with your parents' money, your grandparents' money, your pensions, your 401ks, the deposits that you've made. It sounds an awful lot like what FTX was doing. An awful lot. Now, let's get one thing straight, ladies and gentlemen. I like AMC stock. I like GameStop stock. I like others as well. But in this particular situation, including January 28th, 2021, Robinhood, the broker-dealer that was having major issues, along with many of dozens other broker-dealers like Webull and Interactive Brokers and dozens of other broker-dealers that pulled the buy button on meme stocks like AMC, GameStop, and 13 other stocks on the market, had a greater value at risk to AMC theaters than they did to GameStop. Even though GameStop stock rose up to $480 a share, AMC stock was also up around 1,800% because it started much lower. At that time, according to the documentation directly from the U.S. House Committee on Financial Services, the NSCC assessed a $3.7 billion collateral charge to Robinhood on January 28, 2021. Based on the risk in Robinhood's uncleared portfolio relative to the company's capitalization. This charge ultimately prompted Robinhood's trading restrictions had several components. The one and two largest components were the value at risk charge, which totaled $1.3 billion, and the excess capital premium charge, which totaled an additional $2.2 billion. During interviews with the House Financial Services Committee, Robinhood officials confirmed that the company was only modeling for its potential value at risk charge for the week of January 25th, 2021. In other words, Robinhood had no visibility into the possibility of, or the precise level of, excess premium capital charges that it could be required to pay during the meme stock market event. On January 28th, 2021, after learning of its collateral charge for the day, Robinhood staff first accessed and utilized the publicly available formula that the NSCC uses to calculate excess capital premium charges. 3 weeks after the stock market event on February 18th, the company first incorporated excess capital premium charge into a mathematical model used to estimate when such a charge could be assessed. Now, what this means, further looking into the value at risk, as further detailed in the information that the NSCC provided to Robinhood through an automated portal, the largest components of the company's collateral deposit requirement was a value at risk charge of approximately $1.3 billion. Of that $1.3 billion value at risk charge, approximately $850 million of this value at risk was attributable to AMC theaters, and approximately $250 million was attributable to GameStop. AMC is over 300% more dangerous to Robinhood at that exact moment, and other broker-dealers are inevitably seeing the exact same thing, whether it be Webull, IBKR, Robinhood, etc. The massive value at risk has always been AMC stock. The reason GameStop stock went higher to 480 was because it started much higher in the first place with a smaller float. Now, AMC has a float size that's very, very similar to GameStop. Again, AMC stock has a float of around 198 million. And looking at the float of GameStop, that's 267 million. Therefore, AMC's float is now about 20% lower than GameStop's was at the time of the January 28th, 2021 squeeze, when GameStop went up from $40 a share to $480, and AMC went up from $2 a share to $18 a share before they pulled the buy button. Go ahead, brother. He said there are way more synthetic shares on Amy, and I have to agree, right? The clearing operations manager for Robinhood asked, hypothetically, what happens if a firm cannot meet their morning NSCC margin settlement? Chuck Tenant replied, first defense is a fine. It is outlined on their site. I would call them so they have a heads up. Then give them a timeline on when you can get access to lines of credit and or cash infusion from the parent. Hypothetically, they will work with you. Can't say I've ever had to make such a call. And the clearing operations manager replied, hypothetically, there isn't enough in the line of credit. Chuck Tenant suggested the Robinhood employee should call the NSCC as they are at work already. The Robinhood employee replied that they had been unsuccessfully attempting to contact the clearinghouse. Tenant further implored the Robinhood employee to wake up your senior leaders. It's time for a cash infusion. On the morning of January 28th, 2021, when Robinhood and these other broker-dealers pulled the buy button on AMC, GameStop, and 13 stocks, meme stocks, Robinhood had approximately $696 million in collateral on deposit with the NSCC, leaving them with a collateral deficit of approximately $3 billion fucking dollars. $3 billion. Which they were required to post to satisfy the NSCC's clearing fund requirement or risk being in violation of the NSCC's rules and potentially losing the ability to clear trades for their customers altogether. Jim Swartwout of Robinhood confirmed that this amount came as a surprise to Robinhood and explained to the House Financial Committee Services staff that they had anticipated and prepared for the $1.4 billion of collateral deposit requirement that represents core charges, but because they did not model for excess capital premium, Robinhood therefore did not expect and had not arranged adequate funding for the additional $2.2 billion excess capital premium charge. On the morning of January 28th, Jim Swartwout texted Gretchen Howard of Robinhood at 6:29 a.m. Eastern Standard Time, writing, "Huge liquidity issue." Cheers, motherfuckers. We're going to be so fucking rich because nothing has changed.
Here we go again.
That's right. And shortly after, go ahead, bro. Cheers, baby. We're gonna be fucking rich. filthy fucking rich. Shortly after learning that about Robinhood's liquidity concerns, Gretchen Howard reached out to the little boy from Bulgaria, Vlad Tenev, of the situation and communicated her concerns regarding the liquidity position to the company's chief marketing communications officer, giving her a heads up in case the company's liquidity issues leaked. And boy, did they ever fucking leak. Liquidity issue I want to give you a heads up on in case it leaks. Robinhood executives, including Jason Warnick, COO Gretchen Howard, and CLO Dan Gallagher, first convened internally between 6:30 and 7:15 a.m. of that day to determine how to best address the deposit requirement and manage the situation. During this and several other conversations, the Robinhood team determined that they would need to impose PCO restrictions on certain volatile securities. PCO standing for position close only, meaning they would not allow retail investors to buy, but they were willing to let you sell your shares to short hedge funds to help close their positions, or at least cover their positions, because we all know that they haven't closed shit. It's reasons like this that the broker-dealers are greatly at risk, and it's reasons like this that the shorts cannot close their positions, because it would lead to a massive domino effect in an increase in price that would cause another broker-dealer, another short hedge fund, another short family office, another prime broker, another bank, another clearinghouse, and so on, to become insolvent. So little by little, they're gonna have to pay the piper eventually. Eventually, they may all, or several of them, may end up completely bankrupt and insolvent. In addition to imposing position close only restrictions on top of the existing position limits that the company had implemented the night before, Gretchen Howard inquired about how to turn off automatic approvals on new accounts in an effort to reduce volume on Robinhood's platform. After hesitating to reduce marketing all week, Robinhood leadership was forced to take more restrictive actions to reduce marketing to slow activity on their trading platform. As Howard discussed the technical aspects of throttling or slowing the pace of new account openings, she sought to maximize the reduction of new account creation to ameliorate volatility and mitigate Robinhood's liquidity risk. And here's them talking directly about throttling automatic approvals and their, quote, major liquidity issues. Absolutely nuts. The manager of product management literally messaged this meme, this graphic, to other peoples on their team, saying, the problem is that right now we look like this. For those of you that can't see it, it's a truck flying off the edge of a cliff. So any additional load takes us to the bottom faster, he said. On the morning of January 29th, 2021, the next day, their financial director of brokerage risk estimated that the number of customers waiting in queue for their accounts to be approved had increased to approximately 730,000. Ladies and gentlemen, on January 29th, the day after the January 28th squeeze of AMC and GameStop and the fact that they were position close only, and they started throttling the number of customers that could get automatically approved, because up until that moment, people could log in, sign up, log in, and be automatically approved to trade on Robinhood. There was 750,000 new people ready to buy AMC and GameStop. What do you think that tells you about AMC and GameStop? What do you think is going to happen the next time that one of these stocks runs to new all-time highs? Or at least starts having 30%, 50%, 100%, 200% daily movements day after day. Hundreds of thousands, if not millions of people are going to see it and are going to sign up for new brokerage accounts on varying broker dealers all around the world and are going to want to get a piece of the action. Right, brother?
The FOMO vampire.
He said the FOMO vampire. That's right, baby. The fear of missing out vampire is going to fuck around and find out. The FOMO is going to get off the chain. So Robinhood chose to raise additional capital by issuing convertible notes in 2 tranches to participating investors. At the outset of the capital raising, Robinhood sought $1 billion in new investment. At target, it increased to $3.5 billion by Saturday, January 30th, 2021. Remember, this is just to meet their margin call, ladies and gentlemen. They were thinking $1 billion. $1 billion is 1,000 millions. Think of $1 million. Now think of $1,000 million. What could you do? How much is $1 million to you? Now think of, you need to get that money times 1,000. But not only that, they underestimated, and now they needed 3.5 billion. So now they needed 3,500 millions. Unreal. Just to meet their margin call on AMC, GameStop, and these 13 stocks. Again, the largest one being AMC by over $150 million value at risk. GameStop, $250 million value at risk. Who is the real threat? AMC Theaters. Fucking unreal, man. And again, this isn't just information that I'm making up. This is from the House Financial Services Committee investigation into Robinhood. Let me scroll on down here. A DTCC official separately notified a Robinhood Securities employee that their excess capital premium charge had been reduced to approximately $876 million from the original approximately $2.2 billion. So they needed to come out with $2.2 billion, and Robinhood desperately called up the NSCC to try to get them to reduce their margin call, and they were able to reduce it to $876 million on top of their value at risk, which was $1.3 billion on top of that. Wow. So they needed 1.3 billion plus 876 million just to meet that margin call. At 9:11 a.m., 19 minutes before the market opened, Robinhood Securities received an updated deposit requirement from the NSCC that outlined a total deposit requirement of approximately 1.4 billion with a reduction in excess capital premium charge to $0. This left Robinhood needing to meet an overall collateral deficit at the NSCC of approximately $734 million in about 49 minutes. So subsequent to receiving this, Robinhood had to wire approximately $734 million remaining balance and satisfied the reduced aggregate deposit requirement of approximately $1.4 billion. There was, guess what? Not one, not two, not three, not four, not five, six NSCC member firms, 6 different broker-dealers that generated excess capital premium charges on the morning of January 28th, 2021. So why do you think that there was dozens of broker-dealers? What do you think, bro?
Yeah.
They're all fucked. Again, this was not just exclusive to Robinhood. This was Apex Clearing, the market makers, the broker-dealers, the prime brokerages, the NSCC, the DTCC. Margin calls were flying all over the place. 6 of their firms had these margin calls on the morning of January 28th. And the committee staff ultimately decided to issue an across-the-board waiver of excess capital premium charges to all member firms that were assessed the charge on January 28th, due to concerns that applying the charge as assessed could have created systemic risk to the market. NSCC explained that the extraordinary spike in market volatility in meme stocks particularly was a material contributor to the elevated clearing fund requirements for several firms, including most of those that were subject to these margin calls that day. There you go. When a clearing broker cannot deposit the required collateral, the member is in default to the clearinghouse, and the NSCC may cease to act for that member under its rules, as they did for Lehman Brothers on September 24th, 2008, and MF Global on October 31st, 2011. When they cease to act, the clearinghouses assumes control of the defaulted member's portfolio and liquidates it in its entirety. This is done to limit the risk that the defaulted member poses to the NSCC and to other non-defaulting NSCC members who can be subject to mutualized losses. Remember, ladies and gentlemen, when I tell you that these losses are shared across the board, that this is a domino effect, that's not just an expression. It is literally a domino effect, where one topples the next, topples the next, topples the next, and they all have to share this sort of excess margin call and losses together. They all share the risk. That's right, brother. So as you can see here, Robinhood emphasized that among their main priorities was avoiding negative press, and they expressed doubt that the DTCC would shut Robinhood down as a result of collateral obligations. There you go. David Dussault said, we will navigate through this NSCC issue. We're too big for them to actually shut us down. If you're still invested in Robinhood, I want you to take a deep look into yourself and think, what do you think will happen the next time AMC stock has all-time highs? And I want you to think, what should you do to prevent yourself from losing every dime you have invested? So I'm not a financial advisor, and this is not financial advice, but I'm well diversified across multiple brokerage firms because I'm aware that just like on the day of January 28, 2021, where 6 different broker-dealers were margin called and faced the same insolvency and bankruptcy issues and margin call issues that Robinhood faced, if that were to occur, your stocks would only be insured up to a total value of $500,000 or less. $500,000 or less. So if you have a lot of options, if you have a lot of shares in one broker dealer, you should consider whether or not it would be beneficial to you by speaking to a certified financial advisor or certified financial planner, whether it would be beneficial to you to diversify your holdings into multiple brokerage firms and possibly even be on the lookout for new brokerage firms coming out in the future. Brokerage firms that don't accept the payment for order flow from price distorting dark pools as their main source of revenue, such as Robinhood. Again, these guys were well aware that they were too big to fail, right, brother?
Oh yeah. I can't wait.
At the same time, I can't wait, but I can wait as long as needed. Because my plan is to get rich or die buying. Because these pieces of shit are constantly pilfering money out of our 401ks, pensions, thrift savings plans, IRAs, ISAs, you fucking name it. You name it. They're constantly gambling our money in the derivatives markets, losing our money and using our money as bail-ins for themselves to receive bailouts. And I'm fucking tired of it. That's why I will get rich or die buying. All of the fundamentals that we've talked about on this channel, all of the technical analysis that we've talked about on this channel, all of the due diligence that we've done on this channel together over the last 2.5 years has done nothing but greatly reinforce the fact that I know personally that I'm doing the right thing. That whether the stock price goes up or down in the short term, my due diligence remains valid. And they cannot take that away from me by naked shorting the stock. They cannot take that away from me by trying to make me think that the stock price is not is real, because it is obviously not. Let's take a quick look at the on-balance volume for AMC stock. Damn, you down with OBV? Yeah, you know me. Check that out right there. This is the on-balance volume on the 1-minute chart.
Yeah, you know me.
That's right, brother. Let's take a look at it on the weekly chart. Look at the on-balance volume before retail investors stepped in. It was negative, what's this? Negative 30 billion. No, negative 30 million, excuse me. Negative 30 million in early 2020. And then retail investors started stepping in mid-2020. And the on-balance volume climbed to 28 million. And then towards the end of 2020 kind of dropped to negative 77 million on the weekly chart. And then as the stock price jumped from $2 a share, and this is adjusted for the reverse split. So we're here where it says 112. I will say it is $12. But you know what? I can even change that in my settings. Let's see. This is not the right settings. I don't feel like going into the deep settings down here. So let's just leave it at that. And I know that we just moved the decimal over. So instead of $113.75, this is $11.37. That's a closing price. But during the market hours while they were open, at this point, AMC went from, a couple bucks, $1.35 to $17 and change. And at that moment, the on-balance volume went from 38 million up to 672 million on January 28th of 2021. And then moving forward, it increased to 900 million. And then over here, mid-May, May 14th, 2021, the on-balance volume was at 980 million. And on June 4th, 2021, the on-balance volume had climbed to 1.61 billion. Again, this is the weekly chart, not the daily. But we all know that the all-time high of AMC at the time, before the 10x reverse split, was $79 in intraday trading, $72 and change as a closing price on June 2nd. At that time, the weekly on-balance volume was 1.8 billion. Now you can see here, accounting for the reverse split, you bring it down to 1.14, but even still, looking at the chart and zooming out, because that's what you're supposed to do. When in doubt, zoom out. Here you go. You can see that the all-time high was around 1.19 billion. Excuse me, I got my numbers in the wrong spot. The all-time high on the on-balance volume was at 1.138, 1.138 billion. And today, the on-balance volume stands at 1.233 billion. That is a clear indication that the majority of retail investors have not sold. The on-balance volume is a technical trading momentum indicator that uses volume flow. And this volume flow is believed to increase sharply, that when the volume increases sharply without a significant change in a stock's price, the price will eventually jump upward or fall downward. The volume of AMC remains at all-time highs. It shows sentiment of retail investors that can predict a bullish or a bearish outcome. It doesn't predict what's happening right now. It predicts what is possible to happen in the near future. So comparing the relative action between the price and the OBV generates more actionable signals than the green or red volume histograms commonly found at the bottom of price charts. So when you take a look at the OBV on AMC and you see that the price is collapsing, but the OBV is reaching the all-time highs yet again, it's an indication that the stock price is not real. Now let's go look at another stock, for example, like Metro Bank. And let's take a look at their OBV. Well, let's see what's happening here. Metro Bank is a bank that went woke and is going broke. And their stock price went from $20 a share to $57.36 a share, with an OBV of over 130,000, 180,000, 228,000 on the weekly at a high. I can't zoom out far enough on that screen, so I'll go back and stick on the weekly. 235,000 high on the OBV. And you can see, as the price collapses, so did the on-balance volume. Here it was down negative 600,000. Here it was down negative 3 billion. Here it was down negative 5 billion. And the stock price of Metro Bank currently sits at an all-time low of 40 cents a share. Currently at 58 cents a share. It crawled up ever so slightly. But you can see that they have been greatly sold off. Let me pull it up on my screen over here, and you guys can see what I'm talking about, with Metro Bank having gone woke and is now fucking broke. Here's the clear opposite of what's happening on AMC. Metro Bank's OBV is collapsing as their price is collapsing because retail investors have sold. AMC's OBV remains extremely elevated and coming back towards all-time highs because people continue to buy it at this steal of a price that it's currently seeing. Metro Bank shares were halted after 2 circuit breakers to the downside a few days ago, negative 37.8%. And they went woke and are now going broke. They're so heavily indebted that they might have to close down if they don't raise $600 million fast. And let me just see if they did. Metro Bank raised $600 million. And see if they did. They were supposed to do that over the weekend. Oh yes, they sure did. And guess what? They signed a deal over the weekend, and their shares jumped to 58 cents a share, from 40 cents to 58 cents. And they only raised $396 million from debt refinancing on Sunday. This Sunday that just passed. They were up 26% from 40 cents a share. They were up from 40 cents a share to 58 cents a share. But as you saw, the on-balance volume has collapsed. It's gone. You cannot say the same thing about AMC. Look at that OBV. That's disgusting. Disgusting. No retail investor is holding on to that shit, especially after they pulled this shit. This summer, Metro Bank refused to open a business account for a group of parents because those parents believed that it's harmful to give puberty blockers to young underage children. The financial runs on MTRBF are 1, due to poor asset management, and 2, due to retail investors greatly selling off and having no interest in dealing with a company that does not want to take care of our children. The founder of that group that was denied, his name was Keith Jordan, claimed the bank manager told him that they were blocked because quote, the content of your website conflicts with the culture and ideas we are pushing or presenting. So that was a group of 2,000 parents that were for a group named Our Duty, right? For example, Our Duty to take care of our children, who were denied a business account for their nonprofit, I believe it was, for thinking that it's harmful for transgender kids to transition medically. And I'm not talking about 18-year-olds. I'm talking about 8-year-olds, 10-year-olds, 12-year-olds. They're not even smart enough to not be physically, like clinically fucking insane. Because I don't know if you remember, but at that age, with all the hormones going around and the crazy shit happening, and your brain not being properly developed as you're still growing, you're clinically fucking insane. But this Metro Bank does not like the fact that these people are against transitioning kids into becoming transgender before they're even 18 years old. Retail investors are not diamond handing MTRBF and are selling it off en masse because of the woke bullshit from this bank. And I did a video just a few days ago showing you guys clearly that even Barclays has come out and stated that only a stock market crash can save the bond market. So I will leave this video at that. We have taken an in-depth look into the on-balance volume, the Chaikin indicators, and the MACD, and I think that this video has gone on long enough. I appreciate all you guys. I see what you're saying in the chat. Thank you for being here with us. Make sure you're properly hedged and act accordingly. Go ahead, brother.
Let me go.
I think it's time for the money printer. Jerome Powell, get the fucking money printer, man, because you're going to need it. You're going to fucking need it, brother. Have a great day, everybody. Thanks for joining us. I ain't selling till they fire Janet Yellen. I want my fucking money. Peace and love.
Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, give me the fucking money.